Ever look back on a trade and think, I could have made a lot more money if I entered there? Well, in this video, I'm going to show you a strategy so that you can identify opportunities for these trades. Hey, what's good? Matthew Manuel here. And it took me over 4 years of trading and several losses to come to the point where I actually learned this strategy. And the great thing is that in the few minutes that you watch this video, I'll have taught you everything that you need to know to be able to practice this strategy for yourself. If for some reason you haven't already, be sure to subscribe and hit the bell notification icon so that you don't miss any future content. Also, while you're down there, be sure to smash the like button. It really helps to support the channel. And for those of you interested, I'm just going to take my Instagram and leave it right here. Do with it as you will. And without further ado, let's get into the video. I have personally gone through the liberty of making video chapters for this video, so you're able to go back and forth and rewatch this video as you need to help your learning. So make sure that's not going to waste. Make sure that you take advantage of that. In this video, you can expect to learn about liquidity, how to find it on the charts, and to top it all off, we'll go over an example of how you can use it to get sniper entries like this one. I'm not here to waste any time, so let's get into it. What is liquidity? Liquidity is just the ability to buy or sell an asset without changing the price too much. So pretty much how easy is it to buy or sell the stock, the crypto, whatever it is you are trading. If you're selling a stock, it's very liquid. It's very easy to sell. You don't have to fluctuate too heavy on the price to sell it fast. Whereas if you're selling a car, selling a house, anything like that, there is a going rate for the house, but it really takes time to be able to sell it for the price you want to sell it for. And if you want to sell a house or a car right away, you would probably need to discount the price pretty heavily in order to sell it right away. So assets like stocks and crypto have high liquidity, whereas cars and houses are less liquid. Moving on, let's hop in the charts so I can show you how to identify what liquidity looks like. So here we are looking at Tesla, and Tesla's been trading pretty sideways today, so it's kind of the perfect example of liquidity. When it comes to liquidity, you can kind of think of it as buyers and sellers pushing the price. They're kind of trying to keep the price in one area. And when you see a candle, for instance, like this is a very liquid candle. So what's going on with this candle is they sold it off. So the candle opened right here. They sold all the way down here, which formed liquidity down here for all the people who wanted to buy down here. And they pushed the price up. And then they pushed it all the way up here. And these people up here sold it off all the way down here, and really it's just giving them the ability to buy and sell easily. Now we kind of talked about what liquidity is, talk about how to identify liquidity, because I know you hear that, and I remember I used to hear it all the time. I never really cared enough to look into, hey, what's liquidity? I knew what liquidity was, but I didn't know how it was relevant on the chart. So that is my goal in this video, is to help you see its relevance. I'm going to quickly show you what liquidity looks like, which is all these candles with these wicks. Think there is liquidity. If when you see, hey, this candle came down here, but it was bought up real quick, or it was sold off real quick, or even just these candles with these small little tails, these small little wicks, think of liquidity. Whenever you don't have a big, strong candle like this, or a big, strong candle like this, think, hey, there's liquidity. Whenever you see a wick, think liquidity. I'm really overcomplicating it right now. But yeah, when you see a wick, think liquidity. And as long as you know that all liquidity gets taken out at some point, you're good. So for instance, if I were looking at, again, think of all these wicks as liquidity. If I was looking at these as liquidity, I would think, all right, they need to be taken out. So first sign of liquidity I see here, if you saw my previous video, you'll get a better look into this. But for this video, we're just gonna quickly glaze over this. So right here, what happened first? This candle was formed first, of course, and let's zoom in so we can really see the levels. All right, so right here, we have this huge wick. So right here, I see this and I think, hey, this is liquidity. All right, this is liquidity. And before this candle popped up, I'm thinking, hey, I see this liquidity, and now this liquidity needs to be taken out. What does it look like when liquidity gets taken out? This is what it looks like, this next candle. So notice it comes down, fills right here, and goes just a little bit further. That is a sweep of liquidity. Me seeing this, I think, hey, next time it comes down here, it's going to sweep liquidity and it's going to be a fast reversal. So for me personally, this is my favorite thing to trade right now. Looking at some more examples. So the next area of liquidity I see is right here. It doesn't really look like it was taking anything out. So if I were to see anything come down here, I would be on the lookout for a sweep of liquidity. And that is what we are going to go over now. And just so you know, liquidity sweeps happen on all different time frames. So for instance, this is what it looks like on the 5 minute. You can see there's liquidity here, but if we jump up to the 15, it looks a little bit different. So just know that on all the larger time frames, they have something going on within them as well. Whatever time frame you're trading on kind of determines how long the trade is going to last. But getting back to it, so if I were trading this, and just a heads up, I was actually not lucky enough to see this ahead of time. I just looked back in the charts and saw this. So if I saw this ahead of time, this is how I would have traded it. So let me back up and say we are right here. We're right here. I see this liquidity and I think, okay, this liquidity needs to be taken out. And then trading this being a sniper, we're going to target the top of the last structure, which is over here at 387. So that's about $1.30 move. And actually I'm on the 5 minute. So actually I would set my target up here just because it did some consolidating. But yeah, I would set my target right there. And right there we have a 7-to-1 risk to reward. And right there, that is how I would plan to take my trade. All right. Then we would let the candles come in. Here, let's let those flow. All right, I wouldn't get in yet. Okay, and right here, we broke below. Oh, here. And right here, you can, oh, okay, it's still going. And then right here, you can see that we got this little sweep of liquidity right here. Came down for a little bit, and then it just busted up and went crazy. Right there, that is a sweep of liquidity. That is a sniper entry. And typically with a trade like this, I want to note that this was a trade from Friday crossing into today, which is Monday. That's a big part of the reason I did not see this, but whenever it comes to making these trades, I have after hours turned off because the charts in after hours for this stuff does not matter. But yeah, right here, you see we immediately broke through the target in just 3 candles, and it actually continues going. You see I got my price target from the top of this structure right here. And if you don't understand market structure, be sure to watch this video right here where I kind of go over it so you can better understand where to set your profit target and stuff. But yeah, this one kept running anyways, but usually I would go in, set a safe profit target, and right here, the entry on this, I would have got a 387 call. At the time, had I entered right here, it was going for about $80. And right here where I set my price target, it was going for about $200. I would have sold out of half my position right there, made sure I locked in profits and was just trading with free money, and then left a few runners to see how it finished up. And we got a little pullback, but it continued to ride up. And personally, I would have been out by now, but if you're one of those people who had the balls to hold all day with your runners, hey, that would have been $80 into, I'm sure this is worth almost $400 now. So again, what this is called, looking at it, what this play was, this is a sweep of liquidity. Again, it came down, it swept liquidity, took it out, and then it quickly reversed. This is my favorite kind of play, just because you're able to get amazing entries, you're able to ride the momentum and get out when it's over. If you have any questions or comments, please be sure to comment down below, or don't hesitate to hit me up on Instagram. If you enjoyed the video or learned anything, please be sure to smash the like button. And if for some reason you made it this far and haven't already, be sure to subscribe and hit the bell notification icon so that you don't miss any future content. And last, but certainly not least, thank you so much for watching. Matthew Manuel signing off, and I want to change your life.